It's been better than the last 2 years. Prefs, converts, bank loans, triple B and above, double B, single B and below. You can pick up anywhere from, call it 3.9 to 5.9, depending on duration and quality, which is not bad, which is why I say 30% is not a bad allocation. Cash right now on our cash desks, we have cash to put to work. We're picking up 3.2 to 3.8%. So it's a sort of see and wait. I have been going back into the crypto markets lately. Anytime Bitcoin drops below 17,000, I add to our positions there. Crypto is getting very interesting because we're finally starting to see the bear of regulation coming into play. And I think long-term, that's a good thing. These hearings in the Senate have really poked the bear, as I like to say. And I participated in the last hearings. And when I had a chance to talk to the people on the Hill, or the lawmakers, I sense that they're frustrated now. They're tired of putting these hearings on every 6 months, every time one of these crypto company blows up and goes to zero. They're so unregulated. These unregulated exchanges are just they're all going to go to zero. And what's going to come out of it eventually is going to be a regulated crypto market, which I think will be very interesting because there's real merit. I mean, crypto itself is not the bad guy. Crypto is just software code. It's not the software code. It's all of these rogue players and these unregulated exchanges and the issuance of all these meritless tokens, the token on the exchange, all of this crap, if I excuse my French, It's all going to go away.
The beginning of 2023 has provided Bitcoin with bullish indicators, and the rally to a year-to-date high of $21,647 has crypto traders hopeful that the worst part of the bear market has ended. The surge effect of BTC's bullish price action is also carrying over to Ether and Bitcoin mining stocks. The reduction in Bitcoin Fear and Greed Index to neutral is possibly driven by volume increases, Bitcoin on-chain data, and BTC price decoupling from equities markets. While not all analysts believe a market bottom is in, let's dive into the data. Hello and welcome to Money Talks. In today's video, Kevin O'Leary updates about his outlook for Bitcoin in 2023. Kevin also breaks down the importance of regulatory clarity in the space and how it will drive the future of institutional adoption in crypto.
No, I agree. There's always going to be fraud. The problem is, let me give you an example. Let's talk about tokens based on, we don't even have to mention what exchange, but all the large exchanges, the unregulated global exchanges, incentivize account holders and users to buy their tokens to get discounts on trading fees. It's not new. It's been going on for years. And then they put them on their balance sheet at a ridiculous valuation. And if you look at actually who owns these things, 97% of them are owned by the issuer. You don't know who that person is because it's simply a wallet without a name on it. And the other 3% are valuing it at 60, 70, 80, 90, 100 billion dollars. Now, if there's a cash run, a cash call back to fiat, back to US dollars on $100 billion, you know that exchange is going to fail. And that's exactly what happened to FTX when a rogue player said, I've got $550 million worth of FTT tokens, and I want cash by noon in 3 hours. Well, of course they don't have 500 million cash. None of them do. And so at the end of the day, this is all something that can just be regulated out of existence. You can't do that if it's a very simple regulation. You can't do that if you're a bank. You can't force people to buy your shares just to open an account. That's ridiculous. Or incentivize them with discounts. That's illegal. All I'm saying is set some rules up, and I think this is going to happen. And I'll tell you how I think this plays out. A passport system is going to be launched by regulators in major markets, US, Canada, Switzerland, United Arab Emirates, South American markets. And they're simply going to say, look, if you want access to the fiat cash in the regulated bank accounts in this geography, in this country, in this market, you have to be compliant to this passport. And they'll all have the same rules. And if you want to operate, because remember, the one thing about Bitcoin is it doesn't trade in any one geography. It trades around the world 24/7. So if you want to trade it on an exchange in Abu Dhabi or up in Canada or in Mexico or down in South America or here in the US, you're going to have to be passported, regulated. And that way, if you go offside in any market, they'll pull all your licenses, and then you no longer have access to getting cash in and out of banks. That's how I think they're going to do it. I'm speculating when I say it, but I think you're going to hear more hearings in the Senate and more of this reining in the cowboy rogue nature of what this has become. It's got to end. People are tired of losing all their money. And frankly, I think regulation doesn't have to be, it's not going to change fraud. It's just going to make it much easier for people to understand what the rules are and get rid of the rogue players.
Bitcoin's price spike has been accompanied by massive growth in trading volume. Over the last week, BTC volume has more than doubled, reaching $10.8 billion, a 114% increase over 7 days. Increased trading typically correlates to an increase in volatility. While the current 2.4% 7-day volatility levels are still below the 2022 7-day average of 3.1%, Bitcoin has remained consistent during the 2023 rally. Centralized exchanges, or CEX, have been struggling with low trading volume, meaning lower fees for the business, including layoffs. The increase in volume for all exchanges is likely welcomed news.
I'm always concerned with the Fed's doing. I can only watch what they do and then try and determine how I'm going to put capital to work based on what they do, not what they say. Now, one thing about that data, that CPI data, and lots of other analysts are talking about this, the housing data has rolled over in there, and it's not reflected properly in this CPI 6.5. The real CPI, if we actually were to take true pricing of housing in major markets in the U.S., whether that be semi-detached, rental units included, standalone homes, certainly office and industrial space, that has rolled over, and it is representing a too high an inflation rate inside the CPI because the data they use is 11 to 18 months old. So that's why you're seeing this disconnect in the bond market. Anybody that buys bonds, a fixed income balance sheet investor like me, knows exactly why these spreads have tightened, particularly on triple B credits. They don't believe that inflation is actually 6.5%. Inflation may be as low as 5% right now if we were to true up the data from the housing market.
Bitcoin's previous correlation could have been caused by institutional investors building BTC with other risk assets and large growth companies like Tesla holding exposure. Now that institutional investors and growth companies are holding less Bitcoin, correlation to markets may lessen in the future. Equities markets could continue to flutter due to the resiliency of high inflation, but Bitcoin's divergence from the stock market could help BTC become an investment hedge. According to some analysts, if Bitcoin can become a hedge to equities, institutional investors may return to the market.
A great question. I've still kept the ratio of 30% fixed income and debt to 70% equity because I find equity is still more attractive. The way I look at equity now for the balance of this year, anybody that forecasts past a year, I mean, I don't know how you can do that, but right now I'm assuming the Fed is going to slow down a little bit and probably not pass the 5% terminal rate. And while they wait and see what happens to the economy. So most companies are starting to really cut costs any way they can. But there's been so much productivity with technology over the last 3 years that they've been doing a very good job of that. So you're going to see some earning revisions at some point. I don't anticipate any expansion to PE because we're still sitting at a 17 PE. So I don't think that's going to go up. So I'm looking for companies that A, are cash flow positive, B, do distributions of profits. So in other words, they take the cash and they distribute it through dividends. Some of them will do share buybacks, but not now that's being taxed. I think the dividend is going to be more popular. And so you have to be doing that without taking on debt. So if you have a clean balance sheet, not too much debt, and you're distributing profits, well, that's a good place to invest because you can probably make 5%, maybe 6% on capital appreciation in the next year, and maybe 1.5 to 2% in dividend yield. So I look at healthcare sector, very interesting. I like commodities. I like gold right now. I've pulled my horns in a little bit on tech because those are still trading at over 20 PEs, which is expensive. And those stocks have already had massive corrections. Media stocks are really interesting. They're fibrillating right now because of all the streaming losses. But you've seen some recovery in those names over the last 90 days as people start to say, well, who's going to survive the streaming wars and who isn't? because media itself is an interesting business model if you think that you can get direct to consumer. Disney is under scrutiny now. I own that name. Nelson Phelps has said he wants to be an activist. That's probably good for the stock. And so you've got to find these situations. So underweighting tech, not overweighting energy. I think energy's had a fantastic run, but I think you want to take a little bit off the table there. It's been a very, very good place to be last year. I don't think you'll get the same kind of returns this year. Finding those large cap names in the S&P that have strong balance sheets across multi-sectors that pay distributions, that's the play for 2023.
So what are your thoughts about Kevin O'Leary's prediction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.